Malaysia Airlines restructuring failed to achieve its intended target, says ultimate owner Khazanah Nasional. The Public Accounts Committee's report today quoted Khazanah MD Datuk Syaril Ridwan as saying that Malaysia Airlines continued to report losses due to problems in the Malaysian and global aviation sector. He pointed out that the Malaysian aviation industry is experiencing overcapacity, with Malaysia Airlines, AirAsia, AirAsia X and Malindo serving an only 30 million people market, which works out to about 1.7 seats for one passenger. Syaril says that Malaysia Airlines was supposed to break even in 2018 and start reporting profit in 2019. However, the national carrier had registered billions in losses, which resulted in its fair value not being able to justify its investment costs. He says that the government continued to inject funds into Malaysia Airlines to enable the airline to continue operating as a going concern because it expects to reap overall economic returns from the national carrier's restructuring. Ultimately, Syaril says that the government needs to limit the amount of funds that Khazanah needs to inject into Malaysia Airlines. Until now, Khazanah is helping the government to identify other economic benefits if the administration decides to continue owning Malaysia Airlines. IHH Healthcare is reportedly in talks to sell two of its major assets in India for lower than its initial investment value. According to Economic Times India, IHH has initiated talks to cash out of its 62% stake in Hyderabad-based Continental Hospitals and 74% in Global Hospitals by selling them back to the original founder promoters. According to the report, IHH is believed to be open to divesting its stakes at almost half of the value at which it had come in. Allegedly, it was mismanagement and differences between promoters and IHH that were the last straw for the healthcare group. To recap, in 2015, IHH had acquired 51% in Continental Hospitals for about $45.4 million and subsequently increased its stake to 62%. In the same year, IHH bought 74% in Global Hospitals for close to $200 million. Both were later consolidated and integrated under the Gleneagles brand name. Malaysia may accept a smaller settlement from Goldman Sachs, according to sources quoted by Bloomberg. Bloomberg reports that while Malaysia has publicly demanded that the Wall Street Bank cough up $7.5 billion for its role in the 1MDB scandal, privately, it would allegedly accept a fraction of that. Representatives from Malaysia have discussed a settlement of between $2 to $3 billion, according to people with knowledge of the matter. Malaysian prosecutors are also turning the screws on Goldman by pushing for the case to be heard in High Court. According to Bloomberg, PM Tun Dr. Mahathir Mohamad has dispatched close confidant Tun Daim Zainuddin to serve as top dealmaker. The government, it said, was looking to reach an accord before year-end to show progress on PH's pledge to recoup money plundered from the scandal-ridden State Investment Fund. The FBM KLCI closed 5.3 points or 0.34% down to 1,568.79 after a shaky day of trading coloured by Brexit snags, global tech worries and warnings over slowing growth in Asia. During the course of the day, the KLCI had dipped 9.17 points before clawing back gains, with Hong Leong Financial Group and Aeon Credit Service Malaysia among the top decliners. According to reports, most major Asia-Pacific markets fell as developments on Brexit meant that the deadline for the UK to leave the EU would likely be pushed again from its October 31st cutoff. The International Monetary Fund also said in its Regional Economic Outlook report released today that economic growth in Asia is set to slow more than expected. The IMF said that growth in Asia could moderate to 5% in 2019, 0.4% lower than its April projection. Adding to the uncertainty was revenue warnings from Texas Instruments, a proxy for the global chip industry, which raised worries about the outlook of the global tech sector. Goddang Holdings' net profit for the first quarter of FY20 fell 10.3% to 14.85 million ringgit due to softer property sales. This was despite revenue improving by 14.3% to 147.6 million from 129.15 million previously, mainly contributed by higher work progress from its ongoing construction projects. Its utility division also did better, thanks to lower operating expenses and favourable forex. Moving forward, Goddang said said that it would realign its new property launches to match market demand. The company said that based on its total unbilled sales of 126.5 million and sales progress of its newly launched townhouse project in Putra Perdana, the division is expanding on its customer segments to drive sustainable growth. As for its construction segment, its outstanding order book of 1.14 billion ringgit should be able to sustain the company for the next 2 years. Goddang said that it is also cautiously optimistic on the government's revival of major infrastructure projects.